We are halfway through the 2025 year. So if you are a property investor or home buyer and you are looking at buying a property in regional Queensland, in Bundberg, Gladston, Rockhampton, Mackay, Townsville, or Cairns this year, then I think this video is for you, because what I'm going to do today is jump in and diagnose what's been happening in these markets over the last 6 months. What are the trends been, and how is 2025 likely to play out, so that you as an investor or home buyer can figure out if you should not invest or buy in one of these markets. Stick around, guys. I think you're going to get some tremendous insight as to what's going to be covered here today. Before I dive in, family, I'm just going to quickly introduce myself. My name is Troy Simbassini. I am the owner and head of research of Life Buyers Agency. Now, Life Buyers Agency, we operate under these two brands in regional Queensland. In central Queensland, we operate under the brand called Capricorn Life Buyers Agency, servicing Rockhampton, Mackay, Gladston, and Bundberg. And then in North Queensland, under our brand Tropical Life Buyers Agency, servicing Cairns, Townsville, and the surrounding region. So yeah, essentially we work on the ground as a regional Queensland specialist, and we help a lot of investors and home buyers navigate these marketplaces. And yeah, over the last 7 years, we've purchased more than $250 million now worth of residential and commercial real estate. And look, I suppose if you are someone that's struggling, you don't know where to buy, what to buy, when to buy in any of these markets, and you're having difficulty in getting a deal or getting into these markets in general, feel free to reach out to me and the team, and more than happy to find out what's going on with your buying journey and see if we are able to help you get into the marketplace. We get access to a lot of pre and off market deals. We have a really big network of agents because we work on the ground in these areas, can get stuff pre and off market in isolation of competition, definitely buy you the better quality deals and get you into the market sooner rather than later. So yeah, again, if you fall into those categories, feel free to reach out and we'll see if we can help you guys. Cheers. Okay, let's jump in and analyze the first market in Bundaberg. And basically the format I'm going to be doing here, guys, is evaluating the median house price and how that's been trending over the last 6 months, what's happening on the supply front, what's happening on the demand front, and then we're going to look at the median rental trends and vacancy rate trends. And once we sort of troll through that data, we'll be able to kind of diagnose what's happening in the marketplace right now, and then make some forecasts around how 2025 is likely to play out, so that you as a property investor or home buyer can figure out if this potential market is a good one for you or if it's not the right fit. So let's jump in and analyze Bundaberg as the first market. So right now, Bundaberg, it has a median house price of $655,000. Now, how this median has been trending over the last 6 months, let's jump into that now. So we can see here that the year-to-date median house price has actually grown by 3.4% in Bundaberg, from $633,000 to now $655,000. So a total of $22,000 in median house price growth over the last 6 months in Bundaberg. So in terms of the market going backwards, slowing down, or going forward with Bundaberg right now, it's definitely a market that's on the rise. Prices appear to still be rising here, on track for doing roughly 4% over the last 6 months. And look, that's very good for Bundaberg. It looks like it's another market that just continues to surge along, despite it historically going through a fair bit of growth. If we look at some of these other metrics now, on the demand side, we can see here that days on market's currently sitting at 51 days, and it's actually down 15 days compared to January 2025. So we have demand seems to be ramping up here in Bundaberg as well, and that's probably contributed a lot to why that median house price is growing the way it has over the last 6 months, with heating demand or strong demand. Let's have a look at the stock levels, or the stock on market percentage. So right now, from a supply perspective, stock on market is currently sitting at 0.2%, and inventory levels sitting at 4 weeks. So On the supply side, what I'm seeing here is extremely low levels of supply, and I know this is for a fact. I've spoken to a lot of agents now that are usually selling a lot of stock at this time of year, completely high and dry with what they've got available. So everyone's feeling the pinch right now, and with these stock levels the way they are, it's becoming ever increasingly more difficult to get into this market as things get tighter and tighter and properties become scarce and less available. But that means that if stock levels are low and demand is starting to really heat up, that's definitely going to, I think, put upward pressure on house prices. And it's all the right ingredients you want for ongoing capital growth in 2025. But yeah, we'll get to that in a sec. We can see here that yes, listings have decreased from 8.7%. Listings have decreased from 8.7%, or listings have decreased 8.7% from 137 in January listings to now 126. So a difference of about sort of 10 to 12 properties there in terms of how the market has started to contract from a supply perspective. So supply seems to be definitely going down in this market here, guys. And as I said, it's the right ingredients you want for capital growth. We can see here on the rental side of the market, year-to-date rents have increased from 2.7%, or increased 2.7% from $511 per week to now $525 per week. So it looks like we have a rising rental market here as well. So if you are coming into this market looking at buying an investment property, you know that you're in a growing rental environment, and that's obviously going to be important for you to achieve healthy yields. And we can see here that the vacancy rate currently sits at 1.4%, and that's actually down from 1.6% in January 2025. So that equates to roughly around 10 less properties on the rental side. So we have 10 less properties on the sales side, roughly, and then again another sort of 10 less properties on the rental side of the market. So supply all around, both on the sales side and rental side, seems to be very grim in the Bundberg market. Based on sort of what we've covered off on there today, like my diagnosis for Bundberg this year, and you'll see it at the bottom there, demand appears to be increasing and stock levels are starting to decrease, creating a sort of a more tightened environment for ongoing growth, I think, in 2025. So I think we're still likely to see this market grow on the median house price front and continue to grow on the median rental front because of those tighter vacancy rates as well. We believe that'll start to put upward pressure on rent. So if you are looking at a market, Bundberg certainly is suggesting, or the data is saying all the right things to be a potentially good place to invest this year. Okay, moving on and up the road from Bundberg, we are now in Gladston, and let's have a look at its median house price and how that's trended over the last 6 months. So we can see here that the current median house price for Gladston is $676,000. And in terms of what it's done over the last 6 months, we can see here that the median house price has actually grown by 4.4% in Gladston, from 647,000 to what it is now at 676,000, equating to roughly around 29,000 in growth over the last 6 months. So if you are a buyer that's had your eye on a market like Gladston and you're trying to figure out if it's growing, going backwards, plateauing, it's definitely a market that is on the rise right now. So the median house price is definitely trending in the right direction. If we look at the demand side of the market, we can see here that it's roughly 44 days on market. Most things are taken to sell 44 days, which I think is quite a healthy figure. And it's actually down 11 days from 55 days compared to January. So over the last 6 months, we've seen properties start to sell at a faster rate in Gladston, which suggests that demand is definitely heated up over the last 6 months. And yeah, by dropping 11 days, things are obviously moving a lot faster. On the supply side of the market, we can see here that the stock on market is sitting at 0.3%. And look, if you look at that compared to this time in January, it's pretty much sitting at the same percentage as what it was. So supply from that comparison has remained constant. So that's an interesting one, guys. We haven't seen a contraction in supply. We haven't seen an increase in supply. We've seen supply remain the same. And then that's obviously going to be very interesting, given that supply has remained the same and demand is heating up. And we've seen what the median house price has done over the last 6 months. And now that demand is heating up and supply potentially remain the same, we might start to see the median house price grow even more aggressively as a result of that. So an interesting 2025 to play out, I think, in Gladston. If you look at the median rents, we can see that median rents are currently at $500 per week, and it's actually grown as well from $470 per week. So an increase of 6.3% since January. So growing rental market here as well, guys. So definitely starting to tick a lot of the boxes as we move through the data here. The vacancy rate currently sitting at 2.2%, and that's actually down from 2.9% in January. And that results in roughly about 27-30 less listings. So the rental market is becoming tighter and tighter here. And we've seen these rents grow over the last 6 months, but now vacancies are getting tighter. I think we're likely to see that, I think, put upward pressure on rents. And if you go to my diagnosis at the end there, we can see here that demand is definitely heating up in Gladston and supply levels are remaining constant. And as a result of that, I think this should put upward pressure on house prices. So I think we're going to see this market to continue to grow. And I think it grew, well, if it grew at 4.4 over the last 6 months, the way it is, the way the market has trended now, I think given that demand is heating up and if supply remains constant, I think this market is probably going to do close to 10% by the end of this year. So I think Gladston is on track for a pretty good next 6 months. And then, yeah, if the rental market continues to tighten from a vacancy rate perspective, I think that's going to definitely start to put more upward pressure on rents as well. So growing rental environment and a growing median house price environment for Gladston. So it's starting to tick a lot of boxes. Guys, if you're interested in a market like Gladston, yeah, to me, the data is saying all the right things. Okay, the beef capital, Rockhampton, starting off with its median house price and how that's trending. So right now, the median house price currently sits at $571,000. In terms of what it's done over the last 6 months, its median house price has actually grown by 4.3%, from 547,000 to what it is now at 571,000, resulting in about 24,000 in growth over the last 6 months. So Rocky, the beef capital, is on the rise still, guys. Definitely trending in the right direction. If you are looking at this particular market, it's definitely not going backwards. Doesn't appear to be slowing down, and it's well on track for a pretty good year. So the median house price trending very good. The trend on the demand side of the market, we can see here that right now it takes roughly around 33 days for a property to sell. And this is actually down by 8 days from 41 days compared to January 2025. So demand looks like it's starting to heat up even more. As the months have gone by this year, it started to trend downward and now sitting at around 33 days, which is a very hot market sitting at that figure. Any market that's around that 30 days, you know that demand is very strong and things are selling very quickly. So that's something that you'd probably have to be mindful of if you are looking at investing or buying in one of these markets, and Rockhampton in particular, is that sitting at 33 days, demand is very strong there. So from a trend perspective, like, you're seeing all the right things, right? You're seeing so far median house price trending upwards. We've seen demand starting to really trend upwards now as well, with these days on market going down. In terms of stock sits currently at 0.2. And if we actually compare that current listing volume to January, that's actually the same. Nothing has changed there in terms of supply. So the supply environment remaining constant, demand seems to be ramping up. So look, for me, I'm starting to see the right ingredients here for potential ongoing growth this year. If we look at the rental side of the market, we can see here that rents currently sit at $493 per week, and that's actually up from $484 per week 6 months ago in January. So a total growth rate of 1.8% there as well. So rents appear to be growing. Median house price is growing, so it's starting to tick a lot of the boxes there. That's going to be a good thing for you if you come in and invest in this market, to know you're in a growing rental environment. Now, vacancy rates, if we looked at that, currently sitting at 1.7%, and that's actually down from 2% in January. So that results in roughly around 10 less listings. So the rental market is starting to get tighter here as months go by, and at this point in time, 6 months into the year, it started to trend downwards, and roughly around 10 less listings to what it was in January. So definitely a good thing if you are looking to invest in this market, knowing that vacancies are trending down. So that means that premium rents tend to follow, and also rising rents as well. So my diagnosis for Rockhampton right now is that demand is getting stronger, as we saw with the days on market dropping by a total of 8 days and sitting at around 33 days now, which is very, very hot market in terms of demand. And look, will supply is remaining the same, this should put upward pressure on prices. So that's my diagnosis. Demand heating up, stock and supply levels remaining the same, just means that there is more of an imbalance between supply and demand, because demand has increased. And for the median house price to do 4.3 in the current conditions, it's going to be even tighter conditions going forward from a demand perspective. And I think we're probably going to see this get closer to 10 to 12% by the end of the year in terms of median house price growth. So yeah, upward pressure on prices, I think, for Rockhampton. And then rents looks likely to keep increasing as vacancy rates continue to drop as well. So vacancy rates get tighter, and again, that competition becomes less and less, and premiums start to emerge in the rental market, and yeah, higher yields for you as an investor. So yeah, Rocky ticking a lot of boxes right now. All right, now we are in Mackay. So starting off with its median house price and how that's been trending. So the median house price currently sits at $685,000. Now, over the last 6 months, the median house price has seen a 5% growth rate in Mackay, from 652,000 to now at 685,000. So a total of roughly around 33,000 in median house price movement. So Mackay is on the rise, probably been the best performer out of the market so far, sitting at 5%, and a market definitely trending in the right direction. So look, I'm pretty happy with that for Mackay. If you are looking at this particular market, you know that prices are still definitely rising here, and I think even at that median house price at what it is, they're at 685. I think even that in itself has a lot of wiggle room to keep growing this year. So yeah, median house price is trending healthily. Looking at the demand side of the market, we can see here that it's currently sitting at 34 days, and that's actually the same as what it was in January 2025. So we've seen demand sort of remain really, really strong there. At 34 days, that is a really strong demand side metric, sitting at 34 days, because that just shows that most properties are going under contract within sort of the first 1 to 7 days, which is an extremely hot market, right? And that's remained constant over the last 6 months. And if that demand has, because the demand has been what it is, I think that's why Mackay is outperforming those other regional hubs as we speak. So demand, I'm happy with the demand side of the market. Stock levels and how that's trending, supply. We can see here that stock on market sitting at 0.3, and that's actually the same as what it was in January as well. So we have demand and supply remaining constant. And that's very interesting, right? If this is likely to play out still for the remainder of the year, then I can't see why it cannot grow another 5% over the next 6 months if both things remain constant. So no movement on the demand side over the last 6 months, no movement on the supply side. But I just want to stress that despite there being no movements, supply is very, very low, and that's uh, of a really prime market in terms of like where you have any market that's under 1% in terms of supply is a healthy market to invest in, because that there is not a lot of competition, and as markets contract and demand heats up, that's where you get that imbalance between supply and demand, and that puts upward pressure on prices. But here we are in a market where that hasn't changed over the last 6 months. So I'm seeing all the right things where stock remains slow and demand remains high. We can see here that from a median rent perspective, that's currently sitting at $596 per week, and that's actually up from $581 per week. So a total of 2.5% growth since January. So a rising rental market here as well. Vacancy rate's currently sitting at 1.8%, and that's actually down from 2% in January 2025. So we have a tightening vacancy rate environment, and then we have a rising median rent environment as well. So rents are rising, vacancy rates going down. So we're seeing the right things there from a rental point of view. If you are to come in here and buy an investment, you know that you're in an environment that's started to tighten. So if you buy a vacant property, you know that you'll be able to rent that and rent it at a premium. And then obviously, as that trend continues to trend downwards, you want to see those rents start to grow as well because of that tightened environment. So yeah, look, guys, Mackay ticking a lot of boxes. So my diagnosis for Mackay is that the market to still remain hot, very high demand, very low supply. So as that remains constant, that should drive up house prices, and I think it should easily do another 5% in growth for the next 6 months, definitely. And I think rents, yeah, are likely to continue growing as well as these vacancy rates start to contract. Okay, so we're now out of central Queensland, moving to North Queensland, starting off with Townsville. So we can see here that the median house price for Townsville currently sits at $650,000. Now, how it's been trending over the last 6 months, we can see here that the median house price has actually grown 5.8%. So it's actually outperformed all the other regional hubs, including Mackay, at 5.8% there. And that's actually grown from 614,000 to what it is now at 650,000. So a total growth rate of about $36,000 there over the last 6 months. So Townsville definitely still on the rise, and I know a lot of people are wondering, am I too late to the party in Townsville? Is it a market that still has steam in the engine? Look, by the looks of it, it's still a market trending in the right directions. Doesn't appear to be slowing down, plateauing. It's definitely still rising. Now, for it to continue rising, we want to make sure that demand remains strong, or still is strong 6 months into the year, and as well as the supply environment. So we can see here that from a demand perspective, it's taking on average 33 days for properties to sell. And if you actually compare that to January 2025, demand has remained the same. So it's still sitting at 33 days, 6 months down the track. So we haven't seen a slowdown in demand here in Townsville 6 months into this year, which is a good thing. And that's obviously, likely to put upward pressure on prices if we are in a low supply environment. And by looking at the supply environment, we can see here that stock levels are sitting at 0.2%. So stock levels are even tighter than Mackay, which is crazy to think, right? Because given that Townsville has an extra, 100,000 people, supply is definitely trending in the right direction from an investment perspective. And supply compared to January this year is actually the same. So similar to Mackay, we have demand not dropping off and supply remaining the same. And you can see why that median house price has done 5.8% this year. And obviously, if those two things remain constant as the year rolls on, I think we're likely to see it do a minimum of 10%, I think, by the end of this year. Looking at the rental side of the market, the rental market is up 2%, so it's grown from 491 to now 501. So rentals are growing, and it's good for Townsville that rents are growing because I know rents have always been a hard one for Townsville. I know right now it's very difficult to get into that sort of mid-5 range from a rental yield perspectives, and the rental market has been really slow to sort of catch up to how the house price has grown rapidly over the last couple of years. So good to see the rents are still on the rise here, and I know rents will continue to rise as well as more and more people sort of moving into the region is starting to really drive that vacancy rate down. And if you look at that vacancy rate, we can see here it's sitting at 1.7% now, and that's actually down from 2.2% in January this year. And if you actually look at how many less listings there are right now in terms of properties for rent, 126 less properties on the market for rent. So definitely a market getting tighter and tighter, and I'm starting to see all the right signs here for the rental market to really surge along. And I think it really needs to catch up now to these median house prices, and it's just going to make the market more workable from a numbers perspective. If you were to look at investing in this market, try and get those yields up to around that mid 5s or above would be good, which I know is very difficult to achieve right now in Townsville. So my diagnosis right now for Townsville, with all the data remaining constant, I think the market is likely to keep growing at the fast pace it has been doing over the last 6 months. So median house prices continuing to rise because demand is continuing to remain strong and supply continuing to remain low. And then I think rents will continue to move as vacancy rates tighten here as well. All right, finishing it off with Cairns, far north Queensland, the tropical paradise of Cairns, one of my favourite places in Australia. So we can see here that the median house price is currently $681,000. In terms of how that's trended over the last 6 months, we can see here that the median house price has actually grown by 1.9%. So it's probably underperformed here compared to some of these other regions. So it's come from 668 to 681,000, so roughly around 13,000 in growth there. So probably Cairns is a market right now that's on the rise, but definitely not rising as strong as all of these other regions. But as you can see, it's also one of the most expensive regions as well. So maybe Cairns is potentially starting to hit a ceiling here where the median house price isn't going to grow as aggressively as to what it has in previous years, because that median house price is really starting to push up there now, and maybe a lot of locals are really feeling the pinch to potentially get into this market. But look, if you're looking at Cairns, still a market on the rise, just not rising as aggressively. So if we look at the demand side of the market, it's definitely a market that's still very strong in terms of demand. 37 days on market right now, and that's actually the same compared to January. So we haven't seen demand slow down in Cairns, which is a good thing, I guess. You want to still see that in a marketplace that, as it isn't growing as strongly as some of the others, that demand is still there and still strong. We can see here that stock levels now from a supply perspective is actually really low as well, sitting at 0.3%. And that's actually the same since January. So look, this is very interesting. Like we have really low supply environment, really strong demand environment in Cairns, but we've seen that median house price not do so well. So look, I think the right ingredients are there. We're just not seeing it as aggressive in terms of growth. So Cairns might not be a short-term play. If you're looking at investing for short-term growth right now, it might more or less be a medium or long-term play, as we're not seeing as accelerated growth as some of these other regions. But nonetheless, if you treat everything on a case-by-case basis, who knows, you could potentially go into Cairns and do pretty well. The rental side of the market, rents are currently at $585 per week, and that's actually up from $574. So rents have grown 1.9% since January. So rents are growing, the median house price is growing, like ticking boxes there for sure. And if we look at the vacancy rate environment, vacancy is currently sitting at 1.3%. That's actually down from 2% since January. So 78 less listings. So definitely a tighter rental market now 6 months into the year in Cairns, by 78 less properties. So I think if you manage to get into this market and you jag a vacant property, I think you'll have no trouble whatsoever securing a tenant and that tenant paying a premium, because those vacancy rates are definitely trending in the right direction. So look, my diagnosis for Cairns is that like demand still looks strong, and with supply remaining low, I think the increase is still there, but it's just going to be not as aggressive as some of these other markets. And I think it's going to be maybe more of a medium or long-term play. But it's definitely a market to, I think, look closely at and treat everything on a case-by-case basis, because I know individual suburbs in Cairns are really outperforming right now in terms of like how they've performed over the last 6 months. And look, as vacancy rates continue to trend down, I think rents are, going to continue to grow here in Cairns as well. So, look, that's the market for Cairns. If you were interested in that market, hope that's helped giving you some early insights here as to what's likely to play out for the rest of this year. Well, there you have it, guys. Thank you for tuning in. I really appreciate it, and I hope that's allowed you to get some insight into the regional Queensland property market and where you may or may not want to invest this year. And look, each of these markets are all tailored for, I think, different types of investors, and they're all at different stages and each to their own, I think. So just make sure you go in and do your own individual research, because as I said, there are many individual suburbs in a lot of these regional towns that are outperforming the macro environment in terms of how that region is performing. So make sure you go in and do exactly that. But if you are someone that needs help in doing exactly that and want to get into the marketplace sooner rather than later, as I said at the start, my name is Troy Sabasini. I'm the owner and head of research of Life Buyers Agency, and we help investors and home buyers navigate the regional Queensland property market. So you can give us a call on that number, visit us on that website if you feel as though you might need a hand in getting into the marketplace here. Thank you for tuning in, guys, and I'll see you on the next video.